All right, and welcome to this weekly recap video here from SellThatOption.com. My name is Ryan Bowyer, and I am the founder and head trader here at SellThatOption.com. One of the things that we do each week is we send what is called a weekly strategy recap video. And so what we do there, and I'm going to show you here in just a second because you're watching the video, but what I do there is I go over my current portfolio with all members. And so I go into exactly what it is I'm looking at for the week. I go into strategies and securities that are performing well for me. I go into how I'm looking at adjusting trades. If there are also particular securities or stocks of interest that I'm really looking at making a move, then I'm also going to highlight it here. So that's one of the things that you're going to get if you ultimately sign up for a subscription here at SellThatOption.com is a weekly market overview, weekly portfolio overview. Because we do swing trades and we primarily sell options here at, as our name suggests, SellThatOption.com, we have the opportunity to make really methodological and mathematical decisions based on what it is that we're seeing in the market. And so I go over all of that every Saturday or Sunday with our members. Okay, so let's say you were to pick up a subscription here at SellThatOption.com. Let's take a look at exactly how you would get there prior to getting into this week's strategy recap video. Okay, and if you're logged into your account, you would simply go here to members and then click weekly strategy recap, which does bring us to this page. Now, what you'll notice is that the very most recent one is the first one, and so you simply click play and you will get the weekly strategy recap video. That again gives you everything that I'm looking at for the week, how my positions are doing, whether or not I'm thinking about adjusting any of my positions or whatnot. After the expiration period, I do upload all of these videos to YouTube. That way you all can see the progression of the positions, take a look at securities that we were successful in, take a look at securities that we were unsuccessful in, because my trading is 100% transparent. Okay, now, if you have any questions, please feel free to reach out to me at Ryan, R-Y-A-N, at SellThatOption.com, or click below here and leave me a comment, and I'll be sure to get back to you. And as always, stay humble, stay hungry. Here's to our success, and enjoy this weekly strategy recap video. All right, and welcome to our weekly recap, our weekly portfolio review here at SellThatOption.com. What we're going to do is we're going to go over each of our open positions one at a time here, kind of talk about if we're going to make any adjustments, and really look at kind of where each of these positions are at. We had a relatively quiet week this week, both with the holiday as well as the fact that we were kind of in no man's land in regard to where the time frame that we like to enter into positions. So we only added 3 or 4 positions throughout the day. So let's go ahead and just jump right into these open positions. If you have any questions at all, as always, reach out to me at Ryan at SellThatOption.com. Otherwise, take a look and we will talk about any adjustments we might make going in to the start of the year. Let's do it. Okay, and here we are in DIA, which is a neutral iron butterfly on the diamonds, which is the Dow Jones Industrial Average ETF. As you can see, we're up $166. Really nice right over the center. And so as you all know, we want to be in between these price slices, which are our break evens. And so as long as we're in between these two lines, we're in a profitable trade right now. This pink line for every single security that we're going to look at represents the current price diagram that we're at, and the blue diagram represents the price at expiration. And so right now we are at $166 in profit. This might be something that comes off this week or the week after, as long as we don't see any major movement in the diamonds. All right, let's go into EWJ. EWJ is a Japan ETF. Again, as you can see from our price area, we're right over the center of the security, and so this is another really solid position. Not going to look to do anything in EWJ right now except continue to let time decay do its thing and us continue to collect premium. EWW is a straddle, so this is our first straddle, and it is in the Mexican ETF. It is the Mexico large cap ETF, and so what we're looking at is a really nicely centered straddle. We have a 57.75% probability of profit, and so there's not necessarily anything that we need to do right now. We're not looking to adjust anything because we are really nicely in between our break evens. It's showing us at negative $75 or so on the position, but again, that's just because we haven't had time decay, enough time for the position to eke out some of that time decay. But we're not looking to do anything with this position either, just continue to monitor this trade because it's still well within our break-even points, and if it were to end today, we'd make about $650. Okay, so these are the first three positions that we have on. The large cap China ETF, and so as you can see, we are really nicely spread out. Our risk is really diversified. We've looked at the Japan ETF, we're in the China ETF, and so we're really nicely centered over a couple of different ETFs. Now, again, really nicely secured over the center of the security right now. We're not looking to do anything with this position either except continue to collect that time decay and time premium. This is a neutral iron butterfly, so we do have protection. Okay, let's move on to the IWM, so our small cap US small cap index. We might actually look at taking this position off on Tuesday, and so here's why. As you can see, we laddered into this position. So this is 2 iron butterflies. Yep, so 2 iron butterflies. We have our first one was centered over the 145 strike, and then our next one was centered over the 153 strike. So we actually saw a pretty decent move in the security, which is why we laddered into this position, because had we not laddered into the original position, this would be a losing trade. But because we laddered into this position, we actually are up on the security right now at about $270. And so what I'm going to do is I'm going to take this position off probably early in the week, especially if we see a move down to 151 or 152 early in the week. We saw a pretty decent move on Friday in the security. And so what I want to do is I want to go ahead and take it off for the profit, go ahead and collect that profit, start the new year off well. And so, yeah, I'm probably going to take this position off, and so be on the lookout for that. Let's get into the Qs. The Qs has been a tough position, but we are starting to make some money here. Now, we do have a current probability of profit of 61.05%, so I really like where we're at with this position. We're going to continue to let time decay and time premium eke out of this position, but one of the things that I do want to show is that we do have a really nice, it does look nice. We have the protection here on this neutral iron butterfly, and so really we're sitting pretty well here in the Qs as well. All right, and here we are in TLT. So TLT is the major bond market that people look at, a compilation of the major bond market. We are close here to our break evens, so we are about $1 or so from our break evens, and so if we start to get challenged here at 127.69, we are going to look to adjust the position. What we'll likely do, since this is in January, I'd likely do a straddle here just because we want to collect that time premium and we want to collect as much credit as possible here. We already have the iron butterfly on, so I'd probably look at doing a straddle here. Go small, just try to collect enough to make it worth our while. The other thing that we're going to look to do is, as we get 2 weeks out or so, if we're still getting challenged, we're going to move that short put up to 127. And so those are the two adjustments that I am likely to do there. Okay, let's take a look at UNG. Yeah, UNG had a massive move towards the end of the week. We were down a couple $1,000s on UNG just because I went pretty big in UNG. And so we were down a couple $1,000s in the security, but we saw a really nice move in UNG, which is great. We're back to seeing a profitable trade at expiration. So this might be one that we keep a little bit into expiration. I'm not really quite sure yet what my plan is here, but one of the things that I'll certainly do is if I make any moves, you will absolutely get that email from me indicating kind of what I've done. Now, UNG is natural gas, and so natural gas has had typically in January, December and January, you see a move up in natural gas. But that was kind of the opposite throughout December, is that we saw a 30% move down from about $6.50 to right at $5 in the price of UNG. And so it's really nice to see UNG kind of moving up. I'd love to see UNG move into the 620s, 630s, because some of our positions will automatically close that negative 50. So our short position in UNG for the 5th expiration will definitely go off there. And we might also get our credit spread for the January 19th expiration if we see a move up to that level. Okay, let's take a look at VIX. Not a lot to say here in the VIX VXX. This is a security that we enter into a trade every single week, and so as long as we're still in contango, I'm going to continue to move and continue to sell premium in the VIX every single week, because it's just a trade that makes us a ton of money. XLF. So XLF, we're starting to get into the spider, the different spider securities. This is just a very typical straddle, and so this straddle is really nicely centered over the market right here at 28. We have a probability of profit of right at 60%, and so not really looking to do anything with this position yet. This one might come off this week if it continues to stay, if XLF continues to stay at the 28 level strike. Okay, so not looking to manage this one either. All right, and here we are in XLP. And so again, not a lot to say about this position. It is our typical straddle position. We're nicely centered over the market. Looks like we're at the 56.5 strike, and it looks like we are at 56.70, 56.80 or something. So really nicely centered over the market here, which is why I love to trade these. XLU, let's get into XLU. Okay, so in XLU, we adjusted this position quite a few times in XLU last week. Okay, so in order to understand XLU, you're gonna need to go back to that security. Okay, but one of the things that we can see here, all right, so in XLU, actually, what I'm going to do is I'm just going to move to January 19th expiration. Okay, so we have banked about $540 in profit on XLU already, okay? But right now, if expiration were to occur today, we would be down $682.98. And so this is currently a losing position, right? We do want to see the security move up to above 53, and we're going to hold this through expiration, okay? That's just what's going to happen. We're going to hold this and try to get XLU somewhere in here in expiration, okay? Now, if we add in both securities, let's actually take out that one. Okay, so here we are in XLU, the second XLU position that we added this week. This one's nicely centered over the market, right? And so one of the things that you're going to notice is that if we add this one back in, we add the $540 of profit that we've already banked. At expiration, we are now down 270 on our remaining positions, which actually means we're up $270, right? And so that's one of the reasons that we ladder into these positions, is because if we're initially wrong with one, we can ladder into a position, especially if IV is elevated, so especially if implied volatility is elevated, and we can move with the market, which is exactly what we've done here. Now, if you take this off, we're still looking at a really nice potential profit, right? And so we can take the 540 and whatever happens with our XLU for January 19th expiration and combine those two, and we're likely going to make money still with this position, which is really, really nice. Okay, let's continue to move down. XLU, XLV. So in XLV, this one's getting kind of close. We're centered at the 81 strike, and we are at 82.50 or so. So if we get up to 84, we're going to look to adjust. But in all actuality, we've got 869 as a potential profit or so, and we're at 189, so we're getting close to that 25% profit target that we like to look at. So this might come off, right? Especially if we see a decrease in IV. But really feeling okay about this position, not a lot to talk about. And then finally in XRT, which is our retail ETF, really nicely centered over the market. Again, this one actually might come off this week as well. If it does, you will certainly get an email from me. So if you do have any questions about these positions, let me know. But in all actuality, our portfolio is set up pretty nicely. I like the positions that we have on. I like where it's at. And I'm thinking that January is going to be a nice profitable month for us. Okay. We do have decent buying power left. And so if we need to adjust or add positions, we certainly have the buying power left to do that. But in all, for all intents and purposes, we're nicely centered over the market in almost every security. We've got neutral positions on in all of these securities, and we're going to look at managing some positions for profit early on in the year and then reuse, that money to continue to build this account. Now, last thing we're going to do is we're going to take a look at some implied volatility levels to see where IV is, just to kind of get a general feel for the market and the volatility levels in the market. Okay, so that's the last thing we're going to do is move into our market watch and our implied volatility levels. All right, for those of you that are new, this is really what I base a vast majority of my trading on. So the first thing that I'm going to do is I'm going to look for levels of elevated implied volatility, which is this IV percentile value right here. Now, IV, or implied volatility, fluctuates between 0 and 100, okay? I tend to sell options in elevated levels of implied volatility. And so think anything above 30 or so I'm interested in looking at. Now, there's an entire list and process that I go through when I think about implementing a trade. If all of those come to play or come to pass, then I'm going to initiate that trade. But one of the things that I want to point out is that we have decent implied volatility levels, right? And so we have a number above 50, quite a few above 40, and then about half of our list above 30. And so we have a lot of options when we're looking at beginning to build out our February portfolios, which is going to be the next thing that we do. So we're going to be looking at building out February portfolios here. As we build out those February portfolios, we're going to send out those emails, but we're going to get pretty active here because beginning on Tuesday, we're looking at between, 43 to 45 days left until February expiration, which is really a sweet spot to begin selling options. And so when you're thinking about trading on your own, one of the things that you're going to want to do, if you like the idea of selling options in implied volatility environments, you're going to want to begin selling those there if it's a system that you like and you're comfortable with that style of trading. Now, in your membership areas, you have a couple of things that are important for you to watch when you're looking at this type of strategy. The first is how to add implied volatility percent into your Market Watch tab. There's a video there for you where I go through how to add that. The other thing that you're going to want to do is you're going to want to add or understand what exactly implied volatility is and why it's important when we're selling options. You get those two and you'll understand what exactly it is and why I trade and sell options in high implied volatility levels. Okay, so this does wrap up our weekly portfolio review here at sellthatoption.com. We've got a really solid portfolio moving into the new year. I'm really happy with how December ended, and I think we're in a really good spot to have a great 2018. I'm really excited, and hopefully we see a lot of implied volatility in the market, and so we can sell some of those awesome option spreads that have made us successful. If you have any questions, please feel free to reach out to me at Ryan, RYAN, at sellthatoption.com. Otherwise, as always, stay humble, stay hungry, and here's to our success.